Be confident and bet on yourself. And then you also said like consistency. Why that? Why that for a tip?
I mean, I think we talked about the bet on myself. I left a good paying job to start from scratch. I mean, that's why when you have a great opportunity, it may not be the best timing, but bet on yourself and you can be successful.
Welcome to the podcast dedicated to real estate, insurance, and building your business. Join us as we take you along our own business building journeys with additional wisdom from our network of local and national experts. Welcome to Bricks and Risk.
This episode is brought to you by Property Management Redefined. PMR is not just managing properties, they're creating partnerships that build long-term success for property owners. John and his team can be reached at manage@gopmr.com or by phone 267-753-6005. Tim.
Yes, Sean.
Who's a good client for PMR?
Property Management Redefined is looking for property owners who value three things: accountability, reliability, and a results-driven approach. They want to maximize returns, but still provide client and tenant satisfaction.
There's a lot of property managers out there.
Yes, there are.
What does PMR do really well?
Biggest thing is they're seamless and they're worry-free. So with that approach in mind, it allows the property owner to put their trust in PMR and know that the results will be there. The other thing I think a property owner is really going to value because they do it so well is that they have a local expert team, boots on the ground, managing your properties and your tenants' expectations every day so that you feel good about your investments.
We have millions of listeners out there.
Tens of millions.
If they want more information, how do they find PMR?
Right here, guys. Reach out to John Sachs and his team at Property Management Redefined. They'll take good care of you. Hey, everyone. Welcome to another episode of Bricks and Risk. I'm Tim Garrity.
And I'm Sean Mooney.
Today, Sean, we have one of our homeboys on, local guy, super successful businessman, John Casey, Senior Vice President of Mortgage Lending at Guaranteed Rate Affinity. How you doing today, John?
What's up, everybody?
Thanks for coming in.
Welcome into the show.
So a little background on John. John's a native of Plymouth Meeting, Pennsylvania, and started his mortgage career 22 years ago, assisting with real estate and relocation clients. He prides himself on providing superior customer service while guiding his clients through the entire loan process. As a 13-time President's Club Award winner, super impressive, his number one goal is making the mortgage process as simple as possible. One of the finest to ever graduate from LaSalle University, he walked away with a BA in communications. John currently lives in Lafayette Hill with his wife, Kristen, 8-year-old daughter, Liliana, and Greyhound Oliver. In his spare time, he enjoys coaching Lil's soccer team and playing golf. He's also a passionate Philadelphia sports fan. All right, I'm going to give you a softball here.
Do the Flyers make the playoffs?
Yeah, not that soft.
The Flyers are not making the playoffs.
Okay.
They're going to be a point out.
So I know you can play, and you can play well. So why golf? How'd you get into golf?
So I golfed when I was a kid. I gave it up for 10 years. You know, when you're in college, you don't have money to play golf. We didn't have money to play golf. We barely put our nickels together to get our booze,
Right, basically.
And then after college, I was like, I wanted to be active. I wanted to play sports, but I didn't want to play soccer anymore. Didn't want to play baseball. Can't really get a pickup game of baseball.
True.
Right?
Yep.
So I picked the sticks back up, and it's just something where it's an individual sport. You know, you can go out, and I was like, I'm not going to get hurt by doing this. You know, I'm not going to break a leg. Fast forward. I mean, I did hurt myself last year. But I'm back out.
Wait, where did you play when you were a kid?
We played all over.
All over?
I played Westover. The same courses that are around today. Skipback, Westover, Jeffersonville.
Yep.
Yeah.
You know, I played at the old Plymouth Country Club, which is 1912 now. You know? These courses have been around for 30, 40, 50.
You forgot Walnut Lane.
Oh.
Yeah. Shout out to Walnut Lane, Roxborough.
Roxborough Country Club.
Yep.
I love it.
30-pack off. Me and McCann used to play at Walnut Lane, and we would bring a 30-pack, and we would get on the tee at 1, and we nobody watches you play there, so we literally would play 18, and then if we had any beer left over, we would just restart at 1 until the
Shout out to Pete McCann.
and then when the 30 pack was gone, then we would stop playing. Like it's time to go.
All right, so when you're young playing something like that, and the reason I ask this question is because, like, you know us, like all the boys from college, like none of us are really any good. I mean, Mooney's good, but most of us didn't play growing up, which is kind of why I asked. So when you were playing growing up, like, were you playing with family? Were you playing with friends? Like, what got you into it, like, at such a young age?
Yeah, I mean, I guess, I golfed with family. A couple of my buddies golfed. But I think it's a really good discipline for kids these days. Like,
It is, yeah.
Where it's again, you're standing on that tee box by yourself. You got to swing the golf club. You're not help on a baseball field or soccer field. You're one of 9 or one of 11. You're just part of the team, and you're not the focus. With golf, you're the, you're
Be all end all.
yeah, you're the only one. And I think, like, when you see the Ryder Cup, those guys are playing as a team. They love that because they don't do that.
Yeah, that's not their thing.
It's not their thing.
Yeah.
And I just like
That's interesting.
I just like the discipline of golf and the respect. You get quiet. You mark your ball. There's just certain things that you could teach kids about life on the golf course, which you can't on the baseball field, the soccer field, the football field, the etiquette of golf. The discipline that you have to have.
We played everywhere, like kind of like you. We were all over the place. We would play Alvathorpe being like
Shout out to
9
Alvathorpe,
hole.
Abington Township.
Where's that?
Over my way, and then we would play Woody's.
I
Yeah.
was just talking about that.
Yeah.
Somebody was like, I'm a nurse there at
Jefferson.
At Jefferson.
Yeah,
I'm like,
yeah.
you took my golf. You took my childhood away. You had the par 3, the chip and putt, and then you had the 18 holes in the back that you would sneak on and play. And yeah, I mean, if you wanted to spend a full day on the golf course, you could go to Woody's and be there for like about 8 or 9 hours.
Yeah.
Well, golf too. The other benefit with golf is networking. I mean,
It's so good for business.
There's no other.
I mean, how many times have you and I sat in a golf cart and just BS'd for 4+, 5+ hours?
Seriously.
Hours.
I mean, you're stuck with whoever you're sitting with on the golf course in that golf cart. You can't get away from them.
Yeah.
Yeah, you're getting to know each other. Yeah. You're talking shop. You're talking about life. Whatever it is.
Playing with Hill at Commonwealth, watching him throw 9 irons at trees.
I mean, shout out to Dave Hill.
All right, so
Put that in.
all right, so here's a good one. So, like, this is more today. So depending on who you talk to, 2026 is either great time to buy, or bad time to buy.
Who's saying great time to buy?
I mean, there's plenty of people. So give me your opinion. So you're looking at it from the mortgage side of things. Interest rates have been a big subject of conversation for the last few years, ever since like 22, basically, is when they started going up. What's your opinion of the market today?
So I'm a big proponent of you're going to buy when you're ready, right? Rates are going to be what they are. But here's the thing, like I'm stressing now, especially our area, inventory is so tight.
Yeah.
Rates are still elevated. We had a dip for 7 days, a couple weeks ago.
Yeah.
It's not stopping buyers, right? There's offers going out. There's 10, 12 offers on certain properties. Values in this area. I'm not talking about in general the whole country. I'm talking about specific local to us.
Yep.
Values aren't going up. Or the value's not going down. They're going up. When rates drop, if rates get to 5.75, 5.5, the market is going to be flooded with the buyers that are at 3% now. They're going to be able to absorb.
Yeah, they can move now.
They can move.
Sell and move.
They can move. They don't want 7. They don't want maybe 6.5.
Right.
They'll take 5.5.
Yeah.
5. Absolutely.
Oh yeah.
When that happens, what's going to happen? You're going to
Prices are going to go.
Prices are going to go up. Competition's going to be stronger. You're going to get back to the waived appraisals. You're going to get back to no inspections. It's going to be like COVID again, without COVID, hopefully. So my pitch to buyers, like, get in now. Yes, your rate's going to be elevated, but no, a year, 2, 3 down the line, we're going to refi.
Yeah.
And you have that equity, and that house you just paid $750 for is now going to be worth $850.
What's interesting about now, it's like, I don't know the exact stat, but resale inventory is like in an all-time low, meaning the home that someone's lived in for 25 years, 50 years, 100 years, people aren't selling those right now, mostly because they're owned maybe by like baby boomers, probably a majority of them, maybe the mortgage is paid off, or they have a 2.5%, 3.5% interest rate. So it's interesting that you talk about like what would happen if rates go down low, because if rates do go down lower and that person with the 3.5 interest rate is like, I'll go buy something else because I can stomach it now. There's so many buyers just waiting for that baby boomer resale house in the neighborhoods that we live in. We live in established neighborhoods. So like they're not really building a lot of new construction because there's nowhere to build. There's no land. So the homes that exist are the homes that have been there for like 50 years, 75 years. And that's what these buyers are waiting for. So I find it interesting you make that point. You're like, that's going to make things go up even more.
I mean, I can tell you, my neighborhood, they're buying houses for $600,000-700,000 to bulldoze them.
Yeah, I know, it's crazy.
It's crazy.
And they're building like $1.5 million, $2 million homes.
Correct. And the one thing I see the most in the last 12 months, guess who a lot of the sellers are on a lot of my deals? Estates. People are dying in the houses.
Yeah.
That's when they finally go to market.
Yeah.
Wow.
Wild.
Yeah,
It's completely wild.
That's that end of the market. They're at that age, and that's the only way the house comes
Because it's like
on the market.
when you talk to somebody who's like 65 or 70 years old that they have been in their house for 30 years, it's like, well, where am I going?
Yeah.
If I'm going to Florida, if they go to Florida, great.
Around
Like,
here, it's not that.
It's not as common as people think.
I took my mom, 10 years to be like, all right, I know where I want to be now. And I found a house. Like, it was like right before COVID. And I was like, her house sold in a day because, it was that. But it was like, she didn't know where she wanted to go. So she stayed in a 3,000 square foot home with her dog for 15 years longer than she should have.
So is that mentality killing it? Like, if there's the person that's sitting here that we want to buy or we're thinking of buying, and, we're going to wait for rates to come down, or we're going to wait for this, like, that's the worst mindset you can have right now.
Exactly. Because you wait, and that house that you saw for $500,000 at a 6.5% interest rate now goes for $650,000, and your rate's 5.75. The payment's probably the same, if not more.
You're not gaining any ground.
You're getting. That's why I'm like, get in now and build your equity, build your worth from now. I mean, the best time to buy a house a lot of times is in chaos, or when in times where it's not great. Yeah, it was great to buy a house where rates were 3% and values were just skyrocketing.
Yeah, do yourself a favor.
Yeah.
Like I was kind of in that. I was looking for 3 years or something
Easily.
Yeah, and so I was
Probably
always,
like 7, and I just blacked out for the first 4.
I was like, we'll wait. And then it came to a point where I was like, I'm waiting for something that's not coming.
Correct.
Yes, correct.
You were like waiting for a crash, and everybody's like, crash is coming. The crash is
Or
coming.
you're waiting, you're like, when's that one deal going to pop up that's perfect for me that just happens to be priced right? It doesn't exist.
Or they say I'm waiting for the correction. The correction around here.
Or I'm waiting for the deal.
Yeah.
I'm waiting for a deal.
What you're losing, and I gave you that example of, we bought in November. It's March. They just sold up the street, and it's like higher.
Yeah.
And it's going to go higher. It's
Correct.
it's this thing where people kind of psychologically think they're waiting for the better deal, but they should be deciding just to make the move and do it today.
And you seem okay, right? You did it. You're good. You're living.
I don't know if he's okay.
I mean,
Define that.
Yeah.
it depends.
I feel guilty every day trying to help him out. All right. Well, what's interesting about that, too, is that, so again, as important as interest rates are, I feel like the interest rates right now are more important for unlocking the inventory. Because, again, if someone's like, hey, I've been renting since I was 22 years old and I'm 35, and maybe I have a significant other, maybe I have children, maybe I have 3 dogs, it doesn't matter, maybe I'm single. But the fact that you've been renting for 13 years, you have to start to wonder, okay, if I'm paying $2,000, $2,500 a month in rent, and I just keep doing that year after year, I have a need. I want to go plant my feet somewhere. And as long as you're going to plant your feet, my general agent advice, if you want to call it, is if you're going to stay somewhere for 7 to 10 years, you kind of can't lose, for the most part. Few reasons. Potential appreciation, paying down your principal, tax benefits. Maybe you had some savings over your rent, or even if you didn't, it doesn't matter if it's the same. And when you do those things over a 7 to 10 year period, you're going to build equity. So even after 7 years, like, I need to get out of here. Why did I buy this house? Even if let's say the market completely crashed or whatever, that happened in 2008, 2009. Even if that happens, you can still rent your house. Like, or you can refi your mortgage if rates have come down. Like, you are in control when you buy a house. So if you know you want to own and you've been renting for 5 years, 10 years, 15 years, like, the best time to buy was yesterday. Because if you do that, you're finally committing to the number one way to build wealth in the U.S., which is owning real estate. And that year after year, it always happens because it is. You make money lots of different ways.
And I mean, to that point, I think over the last 100 years, I think 7 of those years, there was a decrease in value.
Yeah.
And it hasn't been, there's been one in like the past like 25, even through the crash. Like,
yeah.
So 93 years, you're on the plus.
Yeah. I mean, think of it this way. If you're paying $2,500 in rent over a 3-year period, you're paying your landlord almost $100,000.
Yeah, it's crazy.
It's crazy.
For
You're
nothing.
making, renters make.
And you get zero benefit.
Renters make landlords rich.
Yes.
So shout out to the landlords out there that are making their money.
Hell yeah.
Yeah. Great business model.
All right, so this kind of plays into like our theme. I mean, we're like a small business entrepreneurship show. So as a mortgage originator, I would assume you're 100% commission, right?
Correct.
Okay. You've been doing this over 20 years.
Over 20 years. Yep.
All right. So, and we like to get a little tactical. So like for you, building your business over, 20 plus year period, what are some of the things that you do that help you stay in the business that long and continue to, part of the President's Club, like you've had a lot of success in the mortgage business. Like, what are some of the things that you do to build your business?
So my story is a little bit different. I've been in the business for 22 years, but not all in the same. Like, I've been an originator for 22 years, but for the first, 14 years, I was in a call center.
That's right. Yeah.
So I worked at a call center, and the leads came to me.
Inbound, yeah.
Inbound calls.
Yep.
So you're servicing the top of funnel stuff.
Yeah. So just, I called it making shoes in a factory. We just worked and just kept grinding and worked. So it wasn't like a real relationship business. It was just like, it was more of like a numbers game.
Yep.
Okay. But then I was like, I need a new challenge. I quite frankly, I was bored. I didn't want to just drive to an office and sit there and just, I could have done it the rest of my life.
Yeah.
I had a good living, whatever. But I wanted to bet on myself and take a challenge. Like, I wanted to go out in the field and do it on my own. So I got a good opportunity. I mean, a great opportunity. My wife's pregnant. I was like, I knew what I was getting into. You're going out. I literally left in 2017. I had not one agent referral. I didn't know when I started.
Yeah.
Nothing. I built it from the ground up all the way.
I love it.
So
Wait a minute. All right. So back the horse up a little bit.
Yeah.
What, like, okay.
gather yourself. Yeah.
Yeah.
You didn't know
Here
this?
we go, folks.
Well, I know the move. I know, but now we're getting granular on what this was. What was so great about the opportunity? So you're making X.
Yeah, making a good, steady living.
You're, okay.
Show up and grind.
So now, and you got to talk me through the math on this, but like, this is, I know what I'm making, and like year after year, you can kind of pencil in what you're going to just be by the way of the loans.
Yeah, I mean,
within a range.
Yeah, I mean, I was inside. You had a very small base salary to keep the lights on, and then everything else was commission.
Yep.
So to leave that where you're going to be like, hey, now you're going to go start as an originator, and it's all dependent upon relationships
With 0 leads,
right?
technically.
0 leads, 0 referrals,
Right.
0 agents.
So that decision, like, how did you make that decision, and what was so much better about was it the potential upside on that versus what you were doing previously?
So it's kind of twofold.
Because some of our listeners out there would call you crazy.
And watchers.
Yeah, I mean, and think of it. My wife was pregnant, and she wasn't working.
That's not good.
So, yeah, I mean, I got the opportunity, but I was like, listen, I could stay in my job and just be not happy and be stuck to a desk and needed to be in an office. The opportunity I was going to have was going to be it was going to be a lot more freedom to do, what I wanted to do, not need to be in a certain location, from this to this. But at the time, I was working for PHH, and Guaranteed Rate Affinity was acquiring PHH.
Yeah.
So I knew that Guaranteed Rate Affinity.
I forgot about that.
Yeah. The name Guaranteed Rate, the whole company is huge in Philadelphia.
Yeah, it's
and I was going to get an opportunity to have that name back to me. And I knew a lot of the agents that didn't support PHH, that was going to go away.
Yeah.
And all the problems of why you didn't want to use PHH.
Really good point.
I was like, well, that's going to disappear in 3 months.
So the baggage.
So I got in 6 months before the merger, or the acquisition, not the merger. And I built those relationships. And the only, if I had took an agent to lunch and the only thing they said, well, I hate the appraisal department at PHH. Well, perfect. It's going away in 3 months. Give me an opportunity. So for 6 months, I took agents to lunch. I sat in their office. I learned their kids' names. I learned their wives' names. I learned what they liked, right? And what's big in this business is, we're talking mortgage, we're talking real estate, but I try to not talk a lot of shop. I try to talk about hey, you want to go golfing, or you want to how's
connect on a personal level.
How's Cindy? How's this? Or how was your kid's basketball game?
Right.
You scroll through Facebook and you see oh, there was a basketball game this weekend. So that's what I did for the first few months, and just I negotiated with PHH hey, you got to give me a little bit so I can build, because I'm not going to sit here and not make any money for 6 months. So so we did, and we built it, and I did events, and we did, it was started from the bottom, and we just kept growing it.
Yeah, talk about, all right, so it started out you're in your first year. This is 2014, this is 12 years ago.
No, 2017.
2017, I'm sorry. So less than 10 years, and you're getting started. You're going one-to-one. You're going belly to belly. Mm-hmm. You're trying to meet people, get to know them, develop a real, true, genuine relationship with them, with the hope that, hey, maybe they'll consider me for their clients' mortgage options in the event, someone's buying a house, let's call it. Let's fast forward to today. So let's take events, for example. Mm-hmm. When you're doing an event, it's not one-to-one. You might have 10 people in a room, might have 100 people in a room. What kind of things are you doing for events that help to obviously strengthen what you have, but also keep the lead gen flowing moving forward?
So, with events, I like to keep them. I don't like the 100 people events. Right?
Yeah.
I like the 5 to 15 to 20.
Nice.
Because I like to invite people that, number one, I do business with.
Yep.
Keep that, keep those relationships. Bring on people that I want to do business with.
Yeah, invite a 2 or 3 in that you're hoping to build.
And I say, to some of my top agents, hey, bring a friend, bring somebody that we don't do business with.
Great idea.
And then it's more, it's more personable. You have 100-person events, great. You're not going to talk to 100 people.
No, you won't even get to 80% of the room.
And if you invite I'm a big proponent of don't invite just a whole office of people. Be selective on who you're targeting. And events work better that way.
Yeah,
at least in my opinion.
Yeah,
we talked about it too. Is your preference my preference? I don't like the big event types. It's just you get lost in it. You can't really find your way. You're talking to someone, but you see all these people. So you're just trying to get to that next person. Where it's if there's 15 people, you can touch 15 people.
Oh, totally.
And that person you've invited, that's one of 15, feels more important than one of 100.
Correct.
Yeah, means a little bit more.
Yeah,
I can go either way. I probably prefer small because I'd rather, both of you, I'd rather get to know people rather than just go shake 20 hands, get 20 business cards, and go home and put them in my contacts. But I like big events in the sense that I'm just so curious about people in general that if I go to a big event, I might really meet 5 super random people that I would never meet. And, me too, I just think I'm used to that. I used to do a lot of stuff like that when I first got into real estate. I was going to these 100, 200 person networking events. And I kind of enjoyed it. I don't know if I enjoyed it from the sense just the energy in the room, because it's it's kind of cool. Maybe there's an MC or there's a buffet, or you're just bumping, you turn around, you bump into someone new. So I did like it from that. But now, almost 47 years old, I'd say I prefer it that way. 10 people, 15 people, and the people that you either already do business with or the people that you know really well and you're like, I would love to like do business with you. So I think that's super powerful. Also, here's another one for you. So one thing you said that you love to do is help good people get financing for the American dream, which is home ownership. So doing this over 20 years, talk about why that has become one of the things that you love most about business.
Yeah, I mean, at the end of the day, I sell, interest rates for a living, but it's more of like, hey, I sell John Casey for a living, right? It's more of like, hey, I put my arms around you. You're making a huge financial transaction. You got to feel comfortable. And at the end of the day, when you sit at a closing table with somebody and they're crying and they're hugging their parents for the first time, like it makes you feel good. You help somebody achieve their dream.
Yep.
And I think we take that for granted a lot of times, because for us, it's like, all right, well, it's on to the next one. It's on to the next one. You're only as good as your last deal, right? But it's to see that, at the end of the process of people being happy, and I find it to be good. It feels good.
Hey everyone, this is Tim, your favorite Bricks and Risk co-host, but don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth, so if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the B&R word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show.
We said in the one episode we talked about was being a chapter in someone's book and how powerful that can be. And this is like the biggest moment of their life for a lot of these people, first-time home buyer, like especially. And for you to be able to orchestrate and make it happen, and I'm sure there's been scenarios where stuff could have fallen through, right? Or, oh, is this deal going to get done? Or this thing came up. I don't even know if we'll be able to close. And you to be able to like come in and ensure that happens, that's like such a pivotal role in that moment that it gives a little bit more meaning and definition.
Yeah, and especially as the ones that are like the buyers that can maybe, they come to me and say, hey, I was declined from another lender.
Oh, yeah.
Right? And you're like, all right, well, let's figure this out. You got a 583 credit score. You're going to have to go FHA. You're going to have to manually be underwritten. I said, but we'll make it work.
Yeah.
And when you go to the closing table with people like that, that's impactful because they were told no.
Yeah.
And you got them a house and they're going to give you a hug and they're going to, you know what? They're not going to, call you to refi. They're going to call you. They're going to tell every person that they know in their sphere of influence, hey, call this guy because he got it done for me when people told me no.
Yeah.
I always say any Joe Schmo mortgage lender can do a 20% down conventional loan with their eyes closed. And trust me, I love doing 20% down conventional loans.
Yeah.
I could do them in 5 days.
A lot less headaches.
Anybody out there?
Yeah.
At John Casey?
But it's the ones that come to me and they have the mediocre to poor credit and they're getting their next paycheck to get enough money in the bank to make the financing work and their dreams work. Those are the ones that are more impactful in my eyes.
Totally.
Yeah.
They're like, you introduce them to like PHFA.
Yeah.
Or you start telling them about grants, or you start telling them about, 6% seller assist on like FHA. And these people thinking, maybe I need $30,000, $50,000 to buy a house that need like 20, 15, depending. And that's huge, man.
So what is it? Can you talk a little bit about, because obviously the Guaranteed name is big around here, but specifically with you, yours is a little different with Affinity. Can you talk to us about that in terms of the relationship between?
Yeah, what's the difference?
Sure. So in 2017, we've had a joint venture with Anywhere Real Estate since 2004. Anywhere was just purchased by Compass Holdings. So now Compass,
When was that?
It was
Last year?
3 or 4 months ago.
Yeah.
Yeah.
It just
I
got-
didn't even think of that.
So now, since 2004, PHH had a relationship with Anywhere. PHH gets sold to Guaranteed Rate Affinity. So 2017, think of it this way. Guaranteed Rate Affinity is 51% owner. Anywhere is 49%.
Yep.
So it's a joint venture with Anywhere.
Okay.
Which now is Compass.
Right.
So when I do well and I do, well for the offices, they're compensated. They make the profits of what we do.
Yeah, you add to the bottom line.
We add to the bottom line, which is huge in this market now because, with agent splits and, how, tight everything is, like, you're making money off your ancillary services, so that's really the biggest difference. I mean, it's the same technology. It's the same, underwriting system. It's the same, we work off of the same, system. It's just that my company has a relationship with, now it's Compass.
Yeah. Have you seen anything change over the last 3-4 months with that acquisition, or is it everything?
What's the vibe been like?
I mean, for us, it's not. I mean,
business as usual.
Business as usual.
Yep.
Like right now, I have access to a couple banker offices. I have one in Conchie, one in Old City. Will I have access to an office and say a Compass in Chestnut Hill that may come down the pike? I don't know. It's still new.
Yeah.
But for us, I mean, I think, when you're adding more agents to the family, so to say.
Yep.
I don't think that's a bad thing.
More opportunities.
More opportunities.
Potential.
Yeah.
All right. So here's a question. So you had like a JV with Anywhere. Anywhere is now part of Compass. Do you think that was the JV across like the country with Anywhere?
Yeah.
So there was Guaranteed Rate Affinities like all over the U.S.
Yeah. So there's it was back when the NRT was formed in 2004.
Yeah.
So like it's not like in South Dakota. Right.
Gotcha.
So it's like
shout out to Amy Stockberger.
There you go. Chicago, Philly.
They pick where they want to be.
Major metros.
You're up into Boston. You're down all the way down to Florida into Miami. You're in Texas.
Gotcha.
You're in Missouri. You're out in California. So like, yeah. I mean, we're nationwide. Yeah. But the presence is a lot bigger in certain markets for sure.
What's your opinion? Do you think the Guaranteed Rate Affinity JV that Anywhere had, because Anywhere had a lot of debt, and I remember a lot of industry people were saying like when Compass acquired Anywhere, they were adding like a couple billion worth of debt to their balance sheet, but they're getting tons of agents, tons of market share. Do you think the Guaranteed Rate Affinity thing was attractive to them when they were doing that? Because Compass didn't really have any kind of in-house financing before that.
So what's ironic is Compass actually had a joint venture with Origin Point, which is another wing of Guaranteed Rate.
No way.
I
didn't even know that.
Yeah. So yeah, exactly. You don't know that because there's not a presence here. There's a presence like out in California and like a little bit in Chicago.
So like more of like a smaller JV than like what would
correct.
What you guys have.
I think this is my own personal opinion that like Robert Refkin saw that and saw like the value in us.
Oh, that's awesome.
So which is a lot bigger than Origin Point, and then there's title that goes along with that as well.
Yeah.
So I think a lot of the yes, the agents and acquiring the Coldwell Banker and Century 21 and Better Homes was great. But he sees value in definitely mortgage for sure.
Yeah. That's awesome, man.
We'll see how it plays out.
Very cool.
Yeah.
All right. So the three of us have known each other for like over 25
years.
Which is crazy.
Wild.
And I didn't even ask you this yet. This is almost back to the golf question. Like, how did you even get into mortgages like over 20 years ago? Like what brought you in?
So
newspaper ad?
No.
Okay.
So
Craigslist?
So as my bio said, I was going to go to be communications, and quite frankly, I wanted to be in sports journalism. And
big sports guy.
Big sports guy.
Should have talked to Cush.
You should have. Well, maybe I just watched Cush.
Shout out to Andy Cushman.
Didn't he write for the Trenton Courier Times or something?
He did.
Dude, he did some good write-ups. He wrote up about my brother Pat's band back in the day.
Back
go.
to me.
Shout out to Pat Garrity.
So I pivoted, right? So we were doing, my uncle worked for the title company, and I was like, can you get me an internship? You want to get an internship at the mortgage company? So I was like, yeah, great. I was like making like, I don't know, $15 or $18 an hour, more than what I could be making. Like,
So it started out as like internship. You're
So-
like, oh, this is some serious money.
yeah. So like,
Young.
so it was 2001, and I'm interning, and I'm sitting there in the summertime, and I'm talking to these guys, and they're like sitting there, and they're just like, coming and going, and they're like, we're making a lot of money, and yada yada yada. So I was like, all right. So I continued the internship. Like I literally worked there the entire time I was at LaSalle because it was like,
Oh, wow.
it was beer money,
Yeah.
But I was like learning.
That's good beer money.
It's
right
good
there.
beer money, but I was like learning the system. I would ask a lot of questions, so I was kind of teaching myself. And I graduated. I did the 4.5-year plan. I stayed on the extra
Were you
semester.
summa cum laude?
I was not.
No.
So January rolls around, and I'm like, well, what am I going to do? And I get a phone call, and they're like, do you want to start a training program to be an originator? So it's January, and I'm like, well, I got nothing else to do. Sure. You're going to pay me.
Know what you're doing?
Yeah. You're going to pay me $40,000 to sit in a training class for 4 months? Sure.
Okay.
So I sat in a training class for 4 months. They taught me how to sell mortgages. They taught me the ropes. And literally, somebody posted something on Facebook the other day, and I was like, damn, it's my anniversary too. I said, I hit the sales floor April 1st, 2005.
Wow.
So
20 years.
21 years is actually being an originator. So it was like, and then I just hit the ground running, and I'm like, all right. I linked up with a couple guys, and like, and that was back in the day when you were doing like stated income loans and stated asset. And I was like, whoa, what are we getting into?
Yeah.
And like, we never did like the countrywide of the
The
world. like-
CISAs and the Ninas?
Yeah. So, but yeah, I mean, that's how it kind of started. And that's, and now I'm like 20 years later, they're like, people are like, do you like it? I'm like, this is my career. I'm not getting out of it.
Yeah.
I'm not starting another business. I'm not
You're not going back to sports journalism?
going back to sports journalism. Not becoming a professional golfer in the Korn Ferry Tour.
Nope.
Yeah. I mean, this is it. But here's the thing, and this is a part that I'd love to hear you guys' feedback. Like, so I'm 43 years old, or soon to be 44.
Yeah.
I go on these President's Club trips.
Yeah.
Right. I'm still like the 4th youngest originator at these trips.
No
Yep.
way.
Okay.
They're national.
The
Everyone
national
in the
trips.
U.S.
Yeah, we usually have about 150 people with spouses.
Wow.
So yeah, so you
So
talking
1 out of 150 nationally is pretty friggin' good.
So let's just say there's 5 guys that are younger than me,
Damn.
and they're like in their 30s. I'm like, so you don't go to LaSalle, you don't go to Temple, you don't go to these schools and be like, you know what, I want to be a loan officer,
Yeah.
right?
Not typically.
Not typically. You don't take classes other than persuasion.
Yeah.
Or you take
There's no loan
accounting.
officer. There's no mortgage major in college.
You don't take a more. So like, it's not like we're a dying breed, but we're an older breed, right? There's so many guys I know that are in their 60s originating loans. They can't wait to get out. I would love to mentor like a young kid coming out of college or somebody that's young and teach them the ropes, because there's no 4-month training class anymore. You just kind of have to hit the ground. But like, it's one thing that I've been the last 12 months, I'm like, listen, I need to find somebody that's younger, that wants to do like TikTok videos, that wants to run the open houses, this stuff that I can't, I don't have the bandwidth to do.
Yeah.
Love to find that person.
Well, do you know what's cool about that? So I recently started connecting with the new dean of the business school at LaSalle.
Yeah.
He's a good dude. He's from New Orleans. And connect you with him and talk to him about some of the business majors. He's really looking for like alumni to come in, like in my field in real estate. I'm sure he'd be very interested in mortgage. Because again, they don't offer that at the school, but they're very viable careers. They're very entrepreneurial careers. They're sales driven, they're marketing driven, they could be management driven depending on how big you get.
And let's be frank, they can be very lucrative.
Super lucrative. And I think it's good to, I think that would be a good connection.
Yeah, absolutely.
I'll
But the other thing, too, is what you had mentioned was you don't go into school to become a loan officer, right?
No, we're an
Right.
insurance agent.
Right. But it really is just what you're exposed to. Like
I got exposed to it.
You got exposed to it, and it became a career.
As
right?
did I.
So I guess it's just the thinking of if you can get someone young and get them exposed to it, it may or may not. It might turn into a career. It might not. But there's an incredible opportunity, especially with all of these older people bailing out.
Mhm.
In the next 10 years, just think of the opportunity that's going to be in front of people
Correct.
in
Real
your
estate,
field.
insurance, same
In
thing.
your field, in
Yeah.
my field. And so, like, what a great time for a young person to come in,
Yeah.
get started, learn the business, and have this amazing road in front of them with all, like, what's the number of insurance real estate agents that are over, I don't know, 60? It's like
Yeah, I mean, it's like
70%,
55 plus is the
something
average
like
age.
that.
Yeah.
You know, it's probably the same
It is.
statistical numbers in your field, same as mine. It's like, if you can just get the exposure, and maybe it is like an internship. Hey,
Yeah.
give me 10 hours a week, run some social, learn the business a little bit, and then they like it, and it turns into something.
Good stuff. So one thing we also like to talk about is biggest struggle. You said your biggest struggle was time management and distractions. So why that? What about like time management or like getting distracted from keeping control of your time has been such a struggle for you?
It's not so much. I mean, the distractions are you go sit in an office, right? You have a real estate agent that wants to come in and talk for 45 minutes.
Yeah.
And I got 15 deals I got to deal with, and they're working on one, right? And you can't sit there and say, hey, I got to get back to my day job here because you want to talk and you want to, that's more the distractions, like getting pulled to lunches, things like that, where it's just like,
You're
hey,
like inner office distractions.
inner office distractions, even like, just getting distracted by, a negative email that comes in and you got to just jump on that and you get just, you got to put a fire out, things like that. Like, I should do a better time of like blocking certain times out where I'm like, all right, listen, I'm going to focus on this or I'm going to focus on that. I just more willy-nilly it where I'm just like, all right, you need this, you need this, you need this, and I'll just get it done.
Yep.
I think, I've done a better job of like setting boundaries of like, all right, if that phone call comes in at 9:30, it can wait till the morning.
Yep.
Or that email that comes in at 10 o'clock. But I think just, that's what I meant by distraction. Just like, getting pulled.
Yeah, it's like even if you had something on your calendar and said, I should be doing this right now. Let's say it was some kind of marketing activity.
Yeah.
And then you're like, but I always have deals going on. There's always agents flowing through the office. Like there's always like water cooler conversations to be had. So it sounds like your setup too also plays into the distraction of your day, where it's like you're in an office with like multiple people. You're a relationship guy. You're obviously catching up with everyone. Like, how you doing? How was your weekend? Or the weather, whatever it is.
And it's not a big thing.
It isn't, but it is. So it is a tremendous difficulty, and I probably share a lot of the same things that you have. Is like, I mean, you get a text, you get an email, the phone's ringing. Like, given your day, there's so many landmines, there's so many activities that are occurring at one time, and it's like trying to manage and trying to prioritize. Like, okay, these 3 emails come in. Like, okay, I got to get this one. I'm push these 2. Like, it's a constant, right?
Yeah.
Like
I was coming in here today, and I'm on my phone with my assistant, and I'm like, can you send this pre-approval? I'm texting a guy that, he didn't see a $5,000 lender credit on his initial CD. I'm like, it'll be on the final CD. Like, I did like 5 things in like 30 seconds right before I walked in here, That's why
that's
I swear.
what I mean.
That's why I won't buy an Apple Watch.
Oh, because of ding, ding, ding,
Because I'm like
ding,
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 ding.
all day. I'm like, my phone dings enough,
Yeah.
my computer dings enough. I'm like, there's too many dinging. I'm like, yeah, you never say never, but.
I mean, here's the thing. Everyone's got their struggle. That is not a struggle of mine personally. It's just not how I'm wired.
That's because you don't have as many friends as we do.
Well,
That's true. I am more of a loser.
But I know that because every time I talk to you or we would do a lunch, the guy puts it on my calendar like in 2 seconds. Like to me, I'm like, oh damn, Pup's got it real well today.
Yeah. No, it's like, you struggle with something like that, and my struggle's different. It's like we all have our struggles. All right, here's another good one. Your tip for listeners and watchers, the bricks and riskers. Be confident and bet on yourself. And then you also said like consistency.
Yeah.
Why that? Why that for a tip?
I mean, I think we talked about the bet on myself. I left a good paying job to start from scratch. I mean, that's why just remember in life, when you have a great opportunity, it may not be the best timing, but bet on yourself and you can be successful.
Here's a good question.
Yeah.
Knowing that you were in the industry for a while, you had the internship at LaSalle, then you were working, inside sales, basically, like lead gen, cold lead gen. How hard do you think it would have been to hop into the guaranteed rate affinity opportunity if you didn't have all that previously? Do you think your mindset would have been a little bit different? Just you personally.
I mean, the knowledge I had when I left, because like when you're working in, when you're working inside, like I talked to thousands of people and saw thousands
lot of reps.
scenarios, a lot of reps. You're like, it's like, you're taking batting practice at baseball. Like you're just getting all those reps and you're seeing all those things. And I always say like, man, I thought I saw everything until this one today, but I saw all that. So like when you're doing, in 2012, I closed 512 deals.
Oh my God.
512.
Damn. That's a lot.
Right? Yeah.
There's only
It's insane.
365 days in a
That's a
year.
lot.
Correct.
Whew.
Yeah. So like when you scale it back and like I certainly don't do 512 deals, but like I feel like my bandwidth, like that's where I've been driven from. Like I have the bandwidth to do a couple hundred deals where like I don't need to hire somebody else. Like I have the ability to do it.
Mm-hmm.
But I think if I didn't have that opportunity before the guarantee rate, not seeing those not seeing those deals or how that something's structured, like that to me is like the stuff that's second nature now. Like it's like, all right, as soon as I talk to somebody, it's like, all right, we need to go this way, or this way. Like my brain just does it.
Yeah.
Which was helpful.
Awesome.
And there's less and less of those. I've never seen this one before.
Oh, you never know. You never know.
All right, your quote is awesome. It's a little lengthy, so give me a minute. Nothing
Wait,
in this,
You're going to say it, or
No,
he's
I'm not saying it.
Okay.
He's got it written down.
All right.
even though I don't need it.
I don't.
Nothing in this world can take the place of persistence. Talent will not. Nothing is more common than unsuccessful people with talent. Genius will not. Unrewarded genius is almost a proverb. Education will not. The world is full of educated derelicts. Persistence and determination alone are omnipotent. The slogan "Press On" has solved and always will solve the problems of the human race by our good friend Calvin Coolidge. Now, without the audience really knowing why that was your quote, why was that your quote?
So, Mooney's wearing purple today.
Yep.
This is episode 122 for all of our
122.
listeners and watchers out there.
That has meaning.
So 122, should I explain the meaning?
Sure.
Yep.
So we're at a fraternity called Phi Gamma Delta, or Fiji.
Fiji.
Tim was my pledge educator. We're coming up on 25 years this week of getting in the fraternity, which is crazy in itself.
Yep.
Episode 122 is special to me because that was our chapter number at Nationals, was 122. So I saw Moon like last week or 2 weeks ago, and I was like,
Yeah.
can we make this happen?
Out
Let's
with
do
another Fiji. Doug Robinson. Shout out to Fresh.
We're having dinner tonight, Fresh.
Ale House.
Yeah, Ale House. That's right. Reservation at 5:30.
Booth. Not bar top.
But that slogan is the Fiji mantra. That was instilled in us in college, and it still lives in my brain every day. You got to be persistent in life. You got to be persistent in this business, because listen, I get no a lot. We all get no a lot. I found a better rate, or I found cheaper insurance, or I have
Their fee was $100 cheaper.
Yeah, I have a realtor that's going to do it for 2%. Well, great.
Yeah.
Are you going to get that service?
Right.
So persistence. You got to stay after it. The world is full of educated derelicts. We know that. Yeah. Shout out Mooney.
Shout out Mooney.
Shout out to Sean P. Mooney.
But yeah, it's a great quote to live by, and I think the three of us at this table, to an extent, still live by it.
Hell yeah, man.
It was interesting too seeing Kelsey post that up when he did that.
Yeah.
Which was interesting because I'm like, I had to take a double take there.
Shout out to Jason Kelsey.
Good job, Jason.
Dude, awesome conversation. Loved every minute of it. So before we shut this one down, why don't you let our listeners and watchers know more about you, where they can find you, and everything you got going on.
And if you brought anything with you that you'd like to share with Tim and I.
Oh yeah.
Oh.
Totally.
Oh, we got goodies?
We got goodies.
Yeah. We got hoagies?
You always got to be branded in this world. So I brought you guys a couple things. This one's for Tim.
Yeah.
Sizes can be exchanged out.
All right.
It's a ticket to Pine Valley.
This is that Wiener Bikini I've been waiting for.
I brought this from Mooney.
God.
Yes.
All right.
And a little bag there.
Cool.
Little lunchtime suds.
Thanks, dog.
But yeah, you always got to be branded. You can see my cell phone, 610-505-0769, john.casey at grarate.com. You can find me on Instagram at johncaseyIV and John Casey on Facebook. So
What's your NMLS number?
So that is my license number.
What is it?
It's 5219.
it's a quiz.
So to that point, so 5219.
Yeah.
So right now, I believe they're in the 2 million to 3 million numbers.
Oh, damn.
So you can tell how long and how ancient I am. I was one of the first 5,300 people to be licensed.
Wow.
It was in the great state of Florida.
How about that?
So Florida was because of the meltdown.
Yeah, because licensure only started
the licensure started.
When was that? 2008?
2009.
Yeah.
So I had to go get tested. I sat in this room for Florida, and I was like, there was questions that I was like, what in God's name is this?
Yeah.
And when they were like, you passed, I was like, perfect.
Yes.
And then every state was like, all right, you got to get licensed. You got licensed.
Yeah.
So that's the. I laugh, and like some of my agents will be like, look at his MLS number compared to somebody you're talking to. Like, it's kind of like putting me as like an OG.
Very similarly, there's Pennsylvania insurance licensing, and you get your Pennsylvania license, and then there's a national license number that you carry, and it's for different things. But recently, someone was like, yo, that's not your license number.
I'm number one.
The format, like, so mine's like a 4-digit number, and now they're like 6 or 7-digit numbers, and they're like, no, that can't be right. I'm like, that's right.
That's right. We're old.
me.
Yeah.
We're old.
That's me. All right. That's all we have for this one, folks. Thanks for tuning in again to another episode of Bricks and Risk. See you next week. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all BNR episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.